So we all think we know how banks work, right? You put your money in, it sits there safe and sound in some big vault, and you grab it when you need it. Sounds simple enough. But what if that's not really how it works at all? What if there's a whole lot more going on behind the scenes? Well, today, we're going to pull back that curtain and take a look at the secrets of modern banking that are hiding right under our noses.
Wow, a revolution before tomorrow morning. I mean, that is a heavy statement. And think about who said it. Henry Ford, one of the biggest captains of industry ever. It really makes you stop and think, doesn't it? What on earth did he understand about the system that most people just don't see?
And that's the big question we're diving into today. We are going to unpack the real mechanics of modern banking. And fair warning, what you're about to find out might completely change how you look at your bank account and your money forever.
All right, first things first. We've got to tackle this huge, fundamental idea we all have about banks, that they're basically just super secure piggy banks for our cash, a safe place for our savings. But is that really all they are?
You know, for centuries, we've been taught to trust banks. They've got these big, solid-looking buildings, right? They project this image of stability and trust. But here's the thing. This system, at its core, is really designed to benefit them first, not necessarily you.
Okay, so this leads us to the first major secret, and it's a big one. Let's call it the value leak. It's this wild idea that the second you put your money in the bank, it starts, well, leaking value. It's not as safe and sound as you might think.
Think about it. Why do you open a savings account? To grow your money, right? But there's this invisible force working against you 24/7. It's called inflation. And as the cost of everything, gas, groceries, you name it, goes up, each and every dollar you've tucked away in that savings account buys a little bit less. It's like your money is on a treadmill that's slowly going backward.
And this chart really shows you what's happening in black and white. This is just an example using data from Switzerland back in 2020, but the principle is the same everywhere. See that first bar? That's the average interest rate the bank pays you on your savings. Pretty small, right? Now look at the second bar. That's the inflation rate. It's higher. That gap right there, that means you are actively losing purchasing power. Your account balance might be ticking up by a few pennies, but what you can actually buy with that money is going down.
So you might be asking, how are banks making all of this money if they're paying me practically nothing? Well, it's all about something called the net interest margin. It's actually pretty simple. They take your money, they pay you that tiny, tiny interest rate, and then they turn around and loan your money out to someone else for a mortgage or a car loan at a much higher rate. And that difference, that spread between what they pay you and what they charge someone else, that's their bread and butter. That's pure profit.
Now hang on, because this next part is a real mind-bender for most people. The moment you deposit your cash, it's legally not just your money anymore. It becomes an asset on the bank's books. It's a tool they can use, and they put it to work immediately to generate wealth for themselves. This is a crucial point we all need to understand.
Okay, so we've established that banks are using your money to make more money for themselves. But what about when you need some of it back? Or more specifically, when you need a loan? Well, this is where we get into what you might call their unfair advantage.
So get this. There's this old saying in banking. They only lend you an umbrella when it's not raining. And there's some truth to that. It's a weird paradox, right? If you walk in looking like you really need the money, you're often seen as a bigger risk and you're more likely to get denied. But if you walk in looking like you don't need a dime, well, suddenly you're a great candidate, and the money's all yours.
And here's another little inside secret. When you ask for a loan matters. A lot. See, loan officers aren't just robots. They're people with quotas and bonuses. Early in the year, say Q1, they can be super picky. No pressure. But fast forward to the end of the year, Q4, when their annual bonuses are on the line, well, let's just say they might be a little more motivated to get some deals approved and hit their targets.
And this quote just nails it, doesn't it? Banks are businesses. They are much more comfortable lending money to a rich person than to a poorer person. At the end of the day, that's what it comes down to. They're not charities, they're for-profit businesses, and lending to someone who's already wealthy is just, well, it's less risky. It's a system that, by its very design, tends to help the rich get richer.
But it's not just about loans and interest rates. Oh no, there are way more subtle ways banks make money off of us. Let's talk about the hidden costs, the things that mean you're probably paying a lot more than you even realize.
Okay, so we're all familiar with things like annual fees for those fancy credit cards, right? That's pretty obvious. But it can go deeper. Some sources suggest banks even sell customer data to other financial companies. And then there's this really sneaky one that affects pretty much everyone, something called the shadow tax.
Let me walk you through how this works because it's pretty clever. So, step 1, you go buy something with your credit card. Simple enough. Step 2, the bank slaps the store owner, the seller, with a transaction fee. Now, what does the seller do? They're not just going to eat that cost. So, step 3, they raise their prices just a little bit on everything to cover those fees. And finally, step 4, you and everyone else end up paying that slightly higher price without even knowing it. That's the shadow tax. So, I know what you're thinking. After hearing all this, it's easy to feel kinda helpless, right? But listen, knowledge is power. The whole point of understanding this stuff is so you can start making the system work for you instead of the other way around. So, in our last section here, we're going to talk about how you can take back control and start playing by a new set of rules.
Look at this comparison. On one side, you have the path the system wants you to take. Just passively park your money in a savings account where it barely grows and use credit cards for everything. But on the other side, that's your path. That's where you actively invest your money so it can actually beat inflation. It's where you think strategically about using cash sometimes to avoid those hidden taxes. It's about being proactive, not passive.
So what's the big takeaway from all of this? It's really about a mindset shift. You need to start thinking of your money not just as something to save, but as a tool to invest. You've got to understand that convenience, like credit cards, comes with a real cost. And remember that the people at the bank are driven by their own incentives. The point isn't to go to war with the banks. It's to finally understand the rules so you don't get played.
Look, at the end of the day, the banking system is just a game. It has a very specific set of rules. And for a long, long time, it felt like only one team really knew all of them. But now, you know the rules too. So the real question is, how are you going to play the game?